Out today, Sweden Producer Price Index year-on-year is up 2.1% in October from its previous 1.7%. Joining me to discuss this data and more from Sweden and Norway is Thomas Bloomfield, economist with Forecast. Welcome, Thomas. Now let's look first at the Sweden PPI out today, an increase of 2.1%. Was this an expected result, and what will this mean for the Swedish krona?
Well, PPI in itself tends to be a sort of non-mover for the market, and today's numbers, they were broadly in line with expectations, which might explain the sort of muted reaction. But that said, this could actually provide some comfort for the Riksbank. So rising producer prices could eventually feed through to inflation, which is currently sitting at minus 0.1% year-on-year. The significance of this being that any signs of impending inflation will probably reduce the likelihood of unconventional measures and dovish commentary from the executive board. So ultimately that would be SEK positive.
Out tomorrow is the Norway unemployment rate. What are you expecting in these results? Is there concern that plunging crude oil prices could disrupt the economy?
Well, tomorrow we're expecting the labour force survey to show a decrease in the unemployment rate to 3.6%. The market median is 3.7%, but looking at the bigger picture, we can't see many reasons for the rate to stay at this level. One of those reasons being a slowdown in the contraction of manufacturing employment, which typically coincides with an improvement in the unemployment rate. And with regard to lower oil prices, it's kind of a double-edged sword in that it was noted in the October interest rate decision that the krone was just over 2% weaker than projected, which is one factor that could help to keep inflation in the 2 to 2.5% range, which is sort of ideal for the Norges Bank. But on the other hand, you've got falling oil prices limiting returns on the sovereign wealth fund, which in turn will reduce the government's spending power. And on top of that, you've got the fact that Norwegian oil and gas companies are predicting an 18% drop in investment in 2015, which is only going to add further drag to the economy.
And looking to the end of the week, Sweden GDP growth rate will be released this coming Friday. It was disappointing in Q1, returned to growth in Q2. What should we expect to see in the release at the end of the week?
I think that we can probably expect a repeat of the disappointing growth in the first quarter. The market's priced in 0.2% growth in Q3, but we're slightly less optimistic and expect 0.1%. Manufacturing confidence and consumer confidence are above their historical averages, but this upbeat sentiment is kind of yet to be reflected in the actual data, which, for example, manufacturing is down 1.9% on the quarter, while retail sales are barely in growth at 0.1%. And so we also don't really see any support coming from net exports, given that there was quite a large and sort of infrequent trade deficit seen in August. So really, to summarise, this, combined with the risks from the euro area and also ongoing geopolitical unrest, it means that we probably shouldn't be too hopeful for an upside surprise on Friday.
Thanks, Thomas. Great to speak with you. That's all from me for now, but do keep clicking back to the Dukascopy TV website for regular updates and exclusive interviews.